Hi there, welcome to Kneppy Invest, and welcome to 3 stocks on the ASX that released interesting or intriguing Appendix 4Cs for the June quarter 2025. I'm recording this video on the 30th of July 2025, intending to release it sometime in September. Definitely want to release it before these 3 companies release their September quarter results in October. More than likely I will. I'd say 99.9543%. Anyway, the 3 companies I'll be focusing on today's video include Qoria, and this is their website. I do know this company a little bit, but not a lot. In fact, I compare this company to Life360, and I'll talk about that a little bit more in a second. The second company is OMG Group. This is their website. Don't confuse this company with another OMG Group called Omnicom Media Group. Completely different companies. And the third company I'll be looking at is Readcloud. Now, funny enough, 2 of these companies have actually changed their name. So Qoria used to be known as Family Zone, and OMG Group used to be known as Forbidden Foods. Obviously, people don't want to eat forbidden foods, which I thought they would. I thought people are probably drawn to forbidden foods more than not, but obviously they didn't like the name and changed it to OMG Group. And I might be a little bit unfair on this company because I just don't like the name OMG Group. I just don't like it. Anyway, maybe that's just me. Okay, so let's turn our attention to Qoria. Now, I do and have compared Qoria to Life360. And fun enough, just before I started recording, I didn't look at it, but I noticed there was this Livewire article titled, "Forget Life360, Online Safety Group Qoria is backed as the ASX next big winner." So I definitely have to read that after I finish recording this video. If someone asks me what Qoria does, I'll just say this company tries to protect children from the nasty internet, from the bad, nasty internet, because they're impressionable. We want to save impressionable people from what lies hidden within the dark depths of the internet. And that is sort of what they do, I suppose. They provide the world's most comprehensive suite of child digital safety and well-being solutions. Okay, and they're doing fairly well as well. And I said well twice then. Anyway, so what I'm going to do in this video is for all 3 of these companies, I'll briefly discuss what they do, and then we'll have a look at their Appendix 4C, we'll have a look at their cash receipts history, and then the chart. So let's have a look at Qoria's Appendix 4C for the June quarter. Now, whenever I open up Appendix 4C, the first thing I always look at is the actual Appendix 4C. Starting off with Section 1, which is cash flows from operating activities. And I really focus on 2 things here. Receipts to customers, how it's changed over the last 4 quarters in particular. That's important for this company. And also whether the company is operating cash flow positive or negative. Now, you might be saying, why have I included Qoria in this particular video when they are operating cash flow negative? And that is the one reason I'm doing this series, is to feature companies that are near that inflection point. Now, when it comes to Qoria, you can't just look at 1 quarter. Look at the whole year, because this company's cash receipts are quite seasonal, and they'll become quite apparent when we look at the cash receipts history. But if you have a look at the second column, and because Qoria and a lot of these companies have just released the 4th quarter results of the financial year, we get full year numbers as well. And receipts to customers, 109.3 million, and the company was or is operating cash flow positive, 10.1 million. But it doesn't stop there. No, it doesn't stop. You might think that's quite positive because operating cash flow positive. But this company does spend a fair bit of money on capitalized research and development, which is in Section 2, 2.1F, other non-current assets, development assets. In fact, they spent $20.9 million in the year on that, and also capital expenditure of $6.6 million. So capital expenditure and development assets, that is about $27.3 million. So this company is still well off from being free cash flow positive. Now, the correct definition of free cash flow is operating cash flow minus capital expenditure. So by that definition, they are, but I like to include capitalized research and development, because that's a real cost. That is a real cost, and it's an ongoing real cost as well. So I do like to include that, even though that may not be the conventions. I'm unconventional. Anyway, so Qoria is still burning through a fair bit of cash. Now, this company is quite big. They have a market cap of $780 million. Well, it could be a little bit out there. We'll say 800. 766.84 billion market cap. So this company is quite big. And they do have, because they're quite big, they can do capital raisings and raise a fair bit of money without being highly dilutive to current shareholders. Looks like they did raise capital during the year, but they do have a lot of cash on hand. Or no, actually, in saying that, cash on hand actually dropped from $29 million to $15.4 million. So they are burning through a fair bit of cash. So Section 8 might be relevant for Qoria. We'll have a look at that in a second, but based off operating cash flow, maybe not, because they're not burning through a lot of cash when it comes to operations. So they might probably not have answered Section 8. Now, they do have a little bit of debt. There's another thing I look at, $52.6 million of debt. But for this type of company, with this size, that's probably manageable. And see if they answered Section 8. No, yeah, they didn't. 3.4 quarters of funding left based off operating cash outflow. So that's another reason why I think companies sort of want to capitalize research and development, because it makes things look better than they probably are. Not that Qoria is doing badly. I still think they will be moving towards operating cash flow positiveness fairly soon. In fact, if you have a look at the highlights, they talk about annual recurring revenue up to $145 million, increasing 25% from the previous corresponding period, I think. Yeah, grew ARR by $29 million. EBITDA positive by $15.4 million. You'll notice this company is EBITDA positive by a fair bit, but also loss-making by a fair bit, and that's because of capitalized research and development, which is amortization. That's a real cost for these type of companies. Anyway, so that's what I'm going to say about that. Gross margins not up nicely. So a nice quarter, but it's still well away from being free cash flow positive. However, they did mention they will be positive free cash flow for the financial year. This is financial year 26. So they expect to be a free cash flow positive. So possibly, even though I said that word twice, this company could be very close to that very important inflection point where they can fund their growth. At this point in time, they can't. They can't do that because they are bleeding cash, burning through cash. But when and if this company does become free cash flow positive, they can grow organically. They don't have to go back to the market for more money. They can grow through their own company's performance. That's a really exciting point. That's the main inflection point most companies are trying to get to. Okay, so that's Qoria's quarter results. So even though they were operating cash flow negative for the quarter, they were positive for the half year or for the full year. And based off their guidance, nice growth in revenue as well, based off their guidance, and that's just that free cash flow statement, positive free cash flow for the year, this could be an exciting year for Qoria. Now let's have a look at the cash receipts history. This is quite important. I like to look at this. And one of the reasons I like to look at this is just to see any sort of... Sorry, for some reason I thought I wasn't recording, but I am, of course. One of the reasons I like to look at a graph like this is just to see if there's any seasonality. And there's definitely seasonality when it comes to Qoria. And you can definitely see that the September quarter tends to be the best quarter in terms of receipts, which probably aligns with the start of the school year in the United States. They get a lot of the revenue and business from the United States. And this company definitely has a bit of seasonality to it. So after that really good quarter in September, you see receipts falling away the next 3 quarters. And the June quarter tends to be the worst quarter. I like to compare to previous corresponding periods. So I'd like to compare this particular quarter to the previous June quarter. Now, there is a slight red flag there. Only $21.2 million of receipts in this quarter compared to $21.1 million the last June quarter or the previous corresponding period. Now, the problem with doing that is sometimes you can have some one-offs. So when I say one-offs, I mean maybe there was some timing issues with collection of receipts, and some of those receipts they might have expected to receive in this quarter might be received in the next quarter. So just because receipts haven't grown all that much from the previous corresponding period isn't necessarily a bad thing. Now, when it comes to the next quarter, I would expect receipts would be over $40 million, and this company will be significantly operating cash flow positive. That's just based off the trend of the last 3 September quarters. In fact, the last 3 September quarters, receipts have grown significantly from the previous one. Okay, now onto the chart for Qoria. For some reason, I just wanted to sing Gloria by... Who sang that? Gloria. Was that you too? I don't know. Chart. this is actually a pretty nice chart. We've seen a breakout above 52 cents, and that would have been just after they released their Appendix 4C. So this is a really nice chart and really nice volume coming through when they did release their Appendix 4C. So this is actually a really nice chart. There you go. Didn't expect this. So this is definitely a possible trade for me right now. Will I rush and buy some shares? Not necessarily, but a beautiful breakout for Qoria. Okay, now on to the second company, not Omnicom Media Group. So in fact, if you Google OMG Group, this is what pops up. So I did have to find the real website, and I found the real website via Market Index. I'll just show you, in fact. So I just went OMG Group, and we have Omnicom Media Group, and there's OMG Australia. And so I thought, I knew this was not the right company. Yeah, headquarters Delaware, United States. I knew this was not the right company, but I just wanted to see what this company does. Omnicom Media Group, or OMG Australia. Okay, so what I did was just go to Market Index, and typically in Market Index, they have the website. Here it is, OMG Group, and yeah, this is it, OMG Group. They manufacture food, sell food. They have Blue Dinosaur, also oat milk. They have a wide vest section. Here we go, Blue Dinosaur. In fact, it looks like they only have two. I have no idea what this is. Blueberry bars, protein cookies. Not sure where they sell this. I can't remember if I've seen this in any supermarkets. They might. Lemon macadamia nut bar, whatever. Not the sort of food I might eat. They also have oat milk goodness. For me, it's just milk, real milk, not fake milk like almond milk or oat milk or the other sort of milks. Anyway, this is actually has the OMG on it. So maybe that's where they got the name. Oat milk goodness. OMG. There you go. I actually did not know that until right then. Oat milk goodness. Okay, not a big fan of anything that's not milk from the cow. That's just me. I do understand some people are lactose intolerant and they need to find alternatives, but I like milk, real milk. Maybe I shouldn't say real milk. Anyway, so that's OMG Group. So why have I included, by the way, I don't like the name OMG. So I sort of understand oat milk goodness, but come on, OMG. Oh my, you know what OMG stands for. Anyway, let's have a look. Oh, by the way, this company has a really small market cap. Did I mention that? Where is it? $5 million, I think. $5.1 million. Another thing that I'm a little bit wary about is the share price. So I am naturally drawn away from companies who have a share price below 1 cent, and OMG Group has a share price at 0.7 cents. So that is a massive red flag for me. They probably have a fair bit of shares on issue, or maybe not that much because market cap is so low. So less than $1 billion based off market cap and the share price. So I'd probably say 800 million, 700 million. Yeah, 728.29 million. So where was I? No, here where I was. This is where I was. You can see the share price only down 0.1 cent, and it's down 12.5%. That's one of the reasons I don't like companies whose share price is below 1 cent, because share price going up or down is a significant percentage change. Okay, so why am I talking about OMG Group? Because I've not really said anything positive about this company at all. So let's have a look at their Appendix 4C. Now, the first thing I'm just going to mention is the company was not operating cash flow positive. So receipts to customers 1.656 million, operating cash flow negative by 54,000, but close. And I thought I am fairly negative on this company just because of the name. Why not give this company a bit of airtime? Why not? They're very close to being operating cash flow positive. They don't spend a lot of money investing and financing activities, so almost free cash flow positive as well. And the other thing is a nice increase in receipts from the previous few quarters. The other thing I might go into is debt. I don't think the company has any debt. A little bit of debt, very small amount of debt. And a lot of times I won't go through the highlights or the commentary. In fact, I haven't done that with OMG Group. Sometimes I have a look at these nice little graphs they might include. So the company has been operating cash flow negative for the last 2 years, but a nice increase in receipts over the last few quarters. And that's actually comparing financial year 24 to financial year 25. So if you compare financial year 24 to financial year 25, things are on the move up just based off that. Okay, so let's have a look at this company's receipts history. So let's go into find OMG. Oh my goodness. There it is. And here we go. Not LGP, we want OMG. Yeah, so the first thing, and again, this company used to be called Forbidden Foods. I'm not sure why they changed the name. Maybe it's just the name, Forbidden Foods, and people were sort of, ugh, I don't want to. I want to buy a company who has a word forbidden. I have no idea. Anyway, they changed the name, and to be honest with you, from say 2022 through the last year, it looked pretty ugly. This cash receipts history going down and down and down. Found a floor back in June quarter last year, 469,000. But since then, we have seen receipts starting to rise. So if you just ignore anything before June quarter last year, this company's been doing well the last 4 or 5 quarters, up to 1.656 million, and on the precipice of being cash flow positive. Now, that's all I know about this company. But if I wanted to research this company a little bit more, I'll just see where they are selling their products. And if they're just selling their products at Woolworths or Coles or some places like that, that would be a bit of a red flag for me, because all it takes is Woolworths or Coles to say, we're not selling a product anymore, and this company could be screwed. So that would probably be the next thing I want to look at, is how or where does this company sell their products? I wonder if they mention it anywhere here. Let's see, Blue Dinosaur. Maybe you can buy it online. I have no idea, but that's one thing I would want to know. How are they selling their products? Otherwise, not much interest in OMG Group at this point in time for various reasons. But just because I'm not interested doesn't mean you don't have to be. You could love this company, and you could love oat milk as well, because it's goodness. Okay, and finally on to Readcloud. They sell, if I was asked what this company does, I'd say they sell e-books or e-software for schools. Here we go. A powerful platform and e-reader for your classroom content and resources, or your e-books and digital resources in one place. So I'm on the right track, I think. Apart from that, I've never really had a look at this company before. And just like Qoria, because they all are in the same sort of area, they deal with schools, that sort of thing, school kids. There is going to be a bit of seasonality when we have a look at the cash receipts for this company. I can't tell you where they sell most of their products. Is it mostly in the United States, or is it mostly in Australia? Haven't gone down that path yet with this company. Okay, so let's have a look at Readcloud. And there's a chance none of these 3 companies are operating cash flow positive. I've included this company for a reason. Found a transition. They released their Appendix 4C on the 23rd of July. But something drew me in. What drew me in? So receipts to customers 4.6 million, operating cash flow negative 631,000. Now, for the year to date, they are operating cash flow positive. Now, one of the reasons why I might have been drawn into Readcloud is just the seasonality, and possibly the June quarter tends to be the worst quarter, just like Qoria, which would make sense. So that could be interesting for Readcloud. In fact, let's see if they do have anything here. You can't really tell here. It's hard to see from their receipts to customers graph there. Anyway, so the other thing I like to look at, of course, is debt, no debt, and how much cash they have in hand. Something else I like to look at, I haven't really looked at this. I did look at it for, or did I? For Qoria. Did not look at the cash on hand for OMG Group, but let's have a look at the cash on hand. And we have about $3 million. So probably plenty enough over the next few quarters. Okay, so let's have a look at the cash receipts history for Readcloud and see if my thoughts are real. Okay. Oh, there is definitely seasonality here. In fact, it looks like this company has 2 really good quarters and then 2 really bad quarters. Oh, I remember now. So this company's best quarter tends to be the March quarter, and they have another good quarter for June as well. So 2 really good quarters in a row. The next 2 quarters should be a little bit negative based off this. But if you have a look at this cash receipts history, you'll notice there is a trend. Now, some red flags here. There was a really good quarter, the March quarter 2024, and the company's receipts haven't exceeded that just yet. But the last 2 quarters were quite good. So two good quarters in a row. And the other thing, now I remember why I've included Readcloud. The other thing is, what we've seen over the last, say, 3 or 4 years, even longer than that, typically the March quarter tends to be the best, which maybe explains or probably is evidence that this company has most of the business in Australia. And I would assume the March quarter is their best quarter if, they have most of the business in Australia. But typically the March quarter is the best quarter, and there is typically a bit of a drop-off in the June quarter. But we didn't see it for this year. In fact, the June quarter receipts were a little bit more than the March quarter. I'm not sure if that signifies anything. Maybe nothing, but maybe that is a good step in the right direction for Readcloud. But in saying all that, I would expect a significant drop in receipts in the next 2 quarters, just based off this. It's pretty obvious this company has seasonality when it comes to their receipts. Now onto the chart for Readcloud. By the way, I did not even look at the chart for OMG Group, and there's a reason behind it. Share price is terrible. But all I'll look at the chart in a second. I completely forgot, but it's not going to draw me in at all. Share price is below 1 cent. What about Readcloud's chart? It's trending in the right direction. In fact, there was a bit of a trend change and sentiment shift back in early May 2024. Definitely a bit of a shift there. Share price was in a well-defined downtrend, and then for some reason, don't know why, and you can see actually some pretty good volume coming in just after that shift trend, say June and July 2024, and the share price has continued to go up. I'd probably like to see a little bit higher volume coming in, however, and I just need to see a little bit more from Readcloud. A little bit more, but the chart isn't the worst I've seen out of these 3 companies by far, because I'd say the worst chart easily is going to be OMG Group. So let's have a look at OMG Group's chart, and we know this was going to look bad. In fact, it's a horrible chart. It's been horrible ever since they listed in 2020, in August 2020, when a lot of companies listed. In fact, the share price of this company has gone down when they were forbidden fruits, has gone from 44 cents to below 1 cent. It has not been a good investment for early shareholders who have held on strongly. Maybe they're not holding on strongly anymore. One thing, however, the increase in volume since February or so has been intriguing, but there is a saying that volume precedes price action. So if you see increasing volume, that could be a sign that the bottom has been reached, and you might see some positive price action moving forward. Okay, that is all I have for this look at 3 companies who release interesting Appendix 4Cs for the June quarter. Qoria, OMG Group, not Omnicom, and also Readcloud. By far, the company that intrigues me the most among these 3 companies is Qoria. And then I'd put Readcloud second, and then well at the bottom, OMG Group. Okay, if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.